Happy New Year. um, all right, so we broke back through the top of most of the long-term trends here. We got a new high there. Still lower than last week's high, but not much. Or wait, well, on futures it is, but I think on SPX it's a new high, right? Or is it just the same? 180.31, 179.87. So it's a new high on SPX. So the week is slightly higher, a couple cents. Anyway, probably doesn't matter much. Neutral positioning skewed to the upside going into FOMC tomorrow. Maybe they're gonna try to pump for 5,200 before the meeting. That's something I would watch out for. They're definitely well positioned for it, and there's a lot of money up there that needs bailed out. This way, if the Fed is hawkish, it's much farther to fall to under 5,000. Well, also, Vega risk doesn't increase as rapidly on a sell off, right? Which gives them more time to bail out of short put positions before they go underwater. Anyway, that's where we're at today. I think that synth long closed out, and I think that's what kind of kick-started this pump into close, because they were up roughly 21 million at the bottom there, and if they held into close they would have been down 23 million. So I have a pretty good feeling that they closed that out. Also, like, um there were some big moves in the options data into the end of the day as well, but that also could have been just delta coming in for tomorrow. That's hard to say. Anyway, commodities down just a tick today. USD still up on the yen, 1.17. US dollar fell a little bit more into close, around 103.81. Yields stayed pretty steady. They're not really going anywhere. And they pulled back a little bit from yesterday's highs, but nothing significant. That'll all be waiting on the Fed meeting. Correlation just kept breaking down throughout the day. I think it moved up almost 12, like 1 month core moved up almost 12% today, which is, that's a pretty big move. Generally, you don't see a move that big on a breakdown, let alone on an upside move. It's even weirder. So some breakdown in the dispersion trade, or just vol being shorted everywhere, right? Both on equities and in indexes. Carry trade leverage is pretty flat. The yield curve eased up a bit, but the yield on vol stayed pretty much the same. I don't think Move has updated yet, but maybe there's some more increased bond volatility because of tomorrow. Skew yesterday had ticked up a little, and correlation with VIX is up. Well, it gained back that 2% that fell off yesterday. And we are pricing in 63 points of rate cuts into the end of 2024 right now. RSP and Dow were pretty supportive today. IWM ran a bit, although not nearly as much as ES. And NQ also lagged, which was kind of interesting. Most of that with tech falling off into the back half of the day. Futures might sell off a little bit into tomorrow morning. This isn't a great neutral position for the bears, and most of their positioning is around 51.50. So I think either either they're gonna try to push and gap 5200 overnight, and then try to position there into FOMC, or this fails like 5233, um, on like maybe like on tonight's Chinese data, and then we might see bears push back for their neutral positioning down at like 5100 or 5150. I think that's about it. Yeah. All right. Likely either flat or grind up overnight. I feel like both positions would be advantaged by a larger move overnight. Like I think bears are really far out of the money from where their put positioning is. And most of the neutral positioning, in fact, is around 5150, right? But bulls have a lot of out of the money short dated calls, that they probably would like to get in the money before maybe JPOW crushes the market. Something to think about, at least. Wouldn't JPOW want to be more hawkish above 5200? Because this run is ridiculous. I mean, it is, but the Fed doesn't let equities direct their decision making, supposedly. What if JPOW raises the neutral rate to 3.25? You mean the federal funds rate? It would be higher than, you mean like 5.5? Because to raise the neutral rate to 3.25 would require like 120, 200? A 200 basis point increase? Why is Vol crushing so hard into FOMC? Because everyone's got a bunch of puts that are sold all over the market. I hope JPOW says AI will save us. Why is VIX so low going into uncertainty to give the appearance of certainty? No, I mean, it's because it's massively overshorted. Better not to raise rates will mean market moves higher and higher. I mean, not necessarily. If they pull back rate cuts, that would probably have a slightly damaging effect. Although, I mean, deficit spending's not stopping anytime soon. So the Fed's really going to have to do something if they want to tame inflation, if they're even aware of the cause of inflation. I mean, they look at the Phillips curve, which is fucking useless. Um, and most of the inflation is coming from the massive surge in NGDP due to f- fiscal spending, right? And deficit spending. So either JPOW does something big tomorrow, or we can have like 6, 7, 8, 9, 10% inflation before the end of the year. We'll see. False. Most inflation is caused by everyone trying to buy their home in H100. 50-point cut. I mean, that would be very spicy. What is something big tomorrow, though? What do you tomorrow? I mean, we just have the FOMC meeting. I don't think we have any other like important data tomorrow, or nothing as important. We have like Great Britain PPI overnight, and then yeah, that's about it. There's like an auction, like a 17-week bill auction before the interest rate decision. But it's mostly just the Fed decision. What can JPEG do, which could be something big? I think the first thing they need to do is cut their promise of rate cuts. Like those have to come off the dot plot. That's probably the most they can do right now. I can't see him raising rates. I mean, he could, but that would be a very aggressive move. Other options to tame inflation would be increase their balance sheet roll off, or actually sell off the balance sheet instead of just rolling off. Those are about the only two tools he has. If he doesn't do something now, financial conditions are going to loosen more. The market is going to drive higher. The wealth effect is going to become greater. And inflation is going to be fucked. He is a tool. I'm well aware. We're already super core. And the 3-month annualized rate is at 6.4% already. The 6-month is at like 5.87%. This is fucking bad. This is really, really bad. Any supply chain disruption further than what's going on in the Red Sea, or energy disruption and inflation, like headline inflation, is going to go sky high. 10%, 12%, and then what? We're going to have to raise federal funds rates to match inflation at that point. Solar flare. I mean, he's got to do he kind of needs to say, all but needs to say that the Fed is going to target a recession, right? Like, I mean, he can't directly come out and say we're going to target a recession, but he needs to do everything in his power to infer that the Fed is targeting a recession, that they really, really want one, because they really, really fucking need one. If one accounted inflation using the 1980s methods, we're already between 10 and 15%. Yeah. What if GPOW just holds and plays it cool like Larry the Camel? If he holds, that means that rate cuts are going to be priced into the next meeting. So Fed fund futures are going to immediately start pricing in more rate cuts. Yields are going to drop and financial conditions are going to soften. And if financial conditions ease, that means more money and more leverage are going to get pumped into the indexes and into the AI bubble, right? And this time, 3 months from now, or 2 months from now at the May meeting, inflation will probably be running hotter than it was in 2022. Don't forget also that the healthcare costs are currently deflationary, right? As they're calculated. Because the look back was during a period where healthcare costs were declining pretty rapidly. In May, they're adjusted. So the May CPI report, healthcare costs are going to be adjusted forward to a period where healthcare costs are increasing, which is going to make those healthcare costs go from deflationary to inflationary. And that's going to be on top of the supply shock that we're already seeing, the higher consumer prices, the higher energy prices, right? Supercore is core inflation X housing X food. Shaping up to be a fun year. It's going to be a weird one. Does JPL and the Fed know all of these things? They should. I mean, you assume that they employ a large staff that would inform them of this. I think the problem is the way they look at the data, partially, and then I think another problem is obviously, political influence, right? What are they gonna do? They can't stop Yellen spending money. They could just make it more expensive for her to pay the debt, but that's not gonna stop her from spending more money. I don't think JPOW can. I mean, if he raises rates, we'd probably crash, right? That would mean that we went through an entire year of easing financial conditions and it was a mistake. That's worse than inflation is transitory. What if they only employ an LLM? Well, then we're fucked anyway. Can't stop retail from spending money either. Nope. Nope. And demanding higher wages, right? I mean, you can. You make sure that they're unemployed largely. And that's what Powell needs. Powell needs unemployment. And they can't say that, right? Because it's against their mandate. But they do. They need to flip the script and they need to target, so they've let price stability go completely and they've solely focused on maximizing employment, right? But because of that we have price instability. And I mean pricing is going to become extremely unstable if they don't do something soon. Like we've got 3 months, 4 months of hotter inflation data, and it's not getting better. Like the shipping costs aren't going down. The Red Sea is not more traversable than it was. They're still shooting fucking 1980s Iranian missiles into ships and attacking them with tiny drones. And we did that before. It's what, like $100 billion a day in inflationary pressure. And yeah, sure, that could be debt, but uh, that's just money that the future generation owes, right? Or a future tax burden. Heading into spring summer when people want to spend will just drive up consumer inflation too. Yep. And also, spring summer is like a home buying season, right? So you get inflationary pressure in the housing market as well because there's more demand. I think they're hoping that the Red Sea crisis resolves quickly. It's been going on for 4 months now. It's guerrilla warfare. It's gonna go on as long as, well, probably forever now that they've realized the effect of it, right? La 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 la, we can't see you, gorillas. What time do you start live streaming in the morning? Market open, usually, if I wake up on time. They need to send in Royal Caribbean to clean that up. They're just gonna food poison them all to death. That's what we were gonna do with our hot base in Djibouti. Tell us your prediction for what's happening tomorrow. I think they cut back the dot plot heavily and take a pretty strong hawkish stance. If they don't, they're fucked. So I think that's the only route forward for them. No problem. How are you celebrating Persian New Year tonight? Well, I figured I'd open up this package of drones and head out to Djibouti. Does the market immediately react to a dot plot reduction? Yeah. All right. What happens to the price of SPX if JPOW chooses to be a CAC? Okay, so if JPOW does nothing tomorrow, right? We keep 3 rate cuts on the dot plot. The Fed says they want to see more data, right? More inflationary data. Financial conditions are going to immediately ease. The market is going to rocket. I don't know where we'd stop. Just up. Just up and even more leverage, right? I think the only thing holding that back at this point would be that getting leverage out of the BOJ now requires that you buy more JGBs. So you've got to suppress your own rate. So buy calls at open, got it? I mean, it's an option. 12,000 Cs will be in the money by June. I mean, with inflation, yeah. In what scenario do we trade flat? I don't think there's a neutral position. Honestly, the only thing probably keeping us from rocketing to like 56 or 6,000 would be gamma max, right? Just like mechanical interference. Trade flat would be an ultimate Uno reverse. I don't think we've traded flat through a FOMC meeting ever. Even if everyone's just neutral positioned, pulling the tails off causes a ton of volatility. Yeah, oil's at 84. Oil's not going to stop going up. Durables aren't going to stop going up. The cost of shipping shit from Asia to Europe isn't going to stop going up. And the more here's where it gets really fun, right? The more oil costs, the more expensive shipping gets to and the shipping of the oil itself gets more expensive. So the higher prices in oil are going to compound oil shipping costs, right? So you get like double inflation. Because now they've got to take those oil tankers all the way around the Horn of Africa, right? Which is double the length of the trip, right? And those ships do not use a small amount of fuel. Like millions and millions and millions of gallons of fuel. What part of the big short are we at? Where everything's fucked, but we keep going up? Add to that the LNG bullshit for Europe. Yeah. So a lot of Europe's natural gas comes off of the east coast of Africa, and that's got to be shipped around the Horn too, which is starting to drive LNG prices up as well. And right now, LNG prices have been like the lowest they've been in like 20 years, right? And if those start spiking as well as oil, like energy inflation is gonna, whew, it's gonna get spicy. It's gonna be like the Ukraine, like the Russia Ukraine conflict starting all over again. Except all of those supply chain issues are still in full effect. Market makers have turned off their own sell buttons. Can't sell when everyone's buying calls, right? Recessions are un-American. They're also necessary. So you're saying I've yet to miss the generational dip buying opportunity. I mean, provided the S&P can actually beat inflation, which I'm pretty sure it's not right now. Like inflation adjusted S&P high is, I think, still significantly higher than where we're trading, or we're just at break even. I can't wait till JPOW does a Volcker so I can tell my kids things are worse for my generation, like a full boomer. You just want him to do that so you can buy a house for 50 grand. All right, let's be honest. And you don't even need him to do that, right? Boomers are going to die anyway. Buying property over the next 15 years is probably just a terrible investment. Especially if you hold it for 15 years. There's so many boomers, they're all going to die. Boomers will live forever. Dude, I'm 31. Perfect. I need a fucking house. What do if inherit? I mean, can you afford the property taxes? That's going to be the problem. Is I mean, a lot of boomers are going to like that wealth is going to move over to the like Gen X and the millennials, right? But are they going to have jobs? Are they going to have money? Are they going to be able to maintain and keep those properties? Maybe not. If valuations are blown out, right? Property taxes just keep going up and up and up. How much can they really be? $10? I think mine are 24,000 a year, and that's after I got them reduced. That's New York, though. It's absurd. Will we still be able to send money to Ukraine and Israel if you want to? The idea of renting for 15 years is extremely depressing. Why? Go buy like a derelict property in some former Rust Belt city for $1. Boom, homeowner. Landed gentry. And then just spend $2,500 a month fixing it up while you live in a tent. Wait, Gork, was it the tax lady who accused you of micro cheating? No. Don't remind me of that, please. Scotland will pay you 100K a year to move to a derelict house on an island in the middle of nowhere. You can buy a house in Japan. I hear they have really low interest rates. All right, that's enough. You guys have a great night. I'll see you tomorrow. Later.